We grew up believing the market was a fair game, a place where everyone had the same chance, where intelligence and hard work would always be rewarded. But that's just a comforting story to keep you sitting in front of the screen. The market isn't fair. It never was, and it never will be. It's a massive machine. Every tick of price, a heartbeat of greed and fear, amplified by millions of people just like you, people who believe they can beat something that was built to crush them. When you look at a chart, you think you're seeing opportunity. What you're really seeing are the footprints of those who've been devoured. A green candle means winners? No. A green candle marks where losers ran for their lives. A red candle means sellers? No. A red candle marks where someone couldn't take the pain anymore and threw in the towel. You think you're analyzing the market, but what you're really analyzing is yourself, your temperament, your weaknesses, your mental limits. And the market records every one of your mistakes without mercy. There's a moment every trader knows. Late at night, you check your phone, your heart drops, your account's nearly wiped. You whisper, "Where did the money go?" But few ever dare to look deeper. Because if you do, you'll have to face the truth. You didn't lose because you lacked knowledge. You lost because the market exposed who you really are. When you take profit too early, it's not because the market reversed. It's because you couldn't handle the fear of seeing profits vanish. When you widen your stop, it's not confidence, it's denial. When you double your size after a win, it's not momentum. It's ego wearing victory's mask. Those aren't technical errors. They're character flaws. And character has a cost, paid in deposits. On Wall Street, there's a saying that never makes it to TV, but echoes through trading floors and hedge funds. Retail doesn't lose because they don't know. They lose because they can't take the pain. That's the brutal truth. The one taking your money isn't the market. It's the person who can endure more pain than you. Think about the times you closed a losing trade because you couldn't stomach one more red candle. Or when you chased a breakout because you feared missing out. Or when you held on so long that your mind went numb and your hands shook. On the other side of that trade, someone did the opposite. They sat still. They waited. They knew the crowd could never master emotion, and they profit from that chaos. When you panic sell, they buy cheap. When you FOMO buy, they quietly distribute. When you place your stop where the textbook says, they take it out without blinking. Not because they're smarter, but because they're colder, more patient, and untouched by emotion. People ask, why does the market always move against me? It doesn't. It just reacts to the same psychology that millions of others share. You think you're unique? You're not. You're part of a massive current where everyone acts the same way. Everyone wants to buy after the rally. Everyone cuts losses when it's already too late. Everyone hopes when losing. Everyone fears when winning. The market doesn't care who you are. It only sees how you react. And that reaction looks just like the millions who've lost before you. If there's one image that captures how the market treats traders, it's this. You're standing before a giant steel revolving door. Every wrong move spins you out, broke and breathless. But those who stand still, who wait, who refuse to be ruled by instinct, they walk through as if the door never moved. You tell yourself, if only I'd held a little longer. But you couldn't, because your psychology wouldn't let you. The moment you saw those small green numbers, fear whispered, take it before it's gone. So you sold. Too early. You took the crumbs and left the feast. And when pain pushed you too far, you held to the bottom, praying, begging for a bounce. Your account drowned, not because the market was cruel, but because your hope was stronger than your reason. That's when the market quietly transferred your money to someone else. On Wall Street, nobody asks, how much did you make? They ask, how many punches from the market can you take and still stay standing? That's why 95% lose, not for lack of skill, but because they can't take the hits that others have learned to absorb. Remember this, the market doesn't pay the best analyst. It pays the one who can endure the most pain. The pain of watching red, the pain of cutting a loss when your ego screams to hold, the pain of staying out when every sell wants in, the pain of doing the opposite of what feels right. Winners aren't smarter. They're just better at not letting emotion destroy them. So where did your money go? It went to the ones who waited for your mistake, to those who survived 1,000 losses, to those who treat trading as discipline, not a game, to those who can stand in the storm and still breathe steady, to traders who understand this simple truth. The market isn't a place to prove how smart you are. It's a place to master your most primal instincts. You ask, where did my money go? It went to the place where you weren't strong enough to stand, cold enough to survive, or disciplined enough to belong. Most traders don't need institutions to deceive them. They deceive themselves. No one teaches them how to lose. No one forces them to give their money away. And yet, they fall into the emotional traps the market sets, almost instinctively, like humans reacting to danger and opportunity since the dawn of time. There's a brutal truth in trading that few have the courage to admit. The crowd doesn't lose because it's stupid. The crowd loses because it's the same. They think the same. They react the same. They repeat the same mistakes. Not from ignorance, but from instincts wired into their DNA through thousands of years of survival. And the cruelest part? That sameness is exactly what creates opportunity for the few who are different. Ever seen a crowd rush into a store during a big sale? Everyone believes they're getting ahead of the crowd. But in the end, they all push, shove, and pay the highest price. The market works the same way. When price surges, the fear of missing out spreads like a fever. No one wants to be the one left watching others win. That fear burns so deeply that logic disappears, and people jump into trades they barely understand. They think it's a choice. It's not. It's instinct. Misfired. The human brain never evolved to trade. It evolved to run from predators, to hunt for food, to stay with the group for safety. It wasn't built to stare at a cold, flickering chart where every tick can change your net worth. So the crowd does what the crowd always does. They act on emotion instead of logic. The truth is, the crowd constantly searches for certainty in a place that offers none. They crave strong signals, clear confirmations, safe entries. But they never realize this. If a signal is obvious, millions are seeing it too. And that's exactly where most people die. That breakout candle everyone's watching? It's bait. That perfect chart pattern circulating in every trading group? It's a trap. That solid support level everyone believes will hold? It's a trapdoor. You think the market targets you? It doesn't. It targets the spots where the crowd feels safe. And when belief is strong enough, when volume is thick enough, when the trap is deep enough, the market snaps the cord and drops the crowd without apology. What destroys traders isn't the bad decision itself, it's what comes after. One hard red candle, panic. One sharp green candle, euphoria. A whipsaw move, exhaustion. A perfect setup that breaks the moment you enter, doubt. Every reaction is pre-programmed by how they see the market. When it runs hard, they think it'll never stop. When it goes flat, they think something big is coming. When it gets choppy, they think they must do something. The crowd doesn't wait well. The crowd hates silence. The crowd can't stand the emptiness of staying out. And that discomfort breeds bad trades. Impulsive entries, random clicks, decisions made just to feel in control again. They don't lose on purpose. They just don't know how to stay still. Worse yet, the crowd suffers from a dangerous illusion, the illusion of control. They think they understand the market. They think they see reversals coming. They think they feel the flow. But they only see what they want to see. Signals that match their bias, they amplify. Signals that contradict it, they ignore. Candles that confirm their belief, they stare longer. Candles that break it, they close the chart. They're not analyzing. They're comforting themselves. They're not trading a plan. They're trading hope. And hope is why they never realize they're walking into a war they were never mentally prepared to win. But the greatest tragedy of the crowd isn't behavior. It's memory. The crowd forgets small losses. They only remember the few times the market did exactly what they predicted, but they missed it or exited too soon. That memory haunts them. It drives them into a spiral of regret. And regret is powerful. It fuels revenge trades, over-leverage, and the desperate need to make it back. The crowd doesn't trade the market. They trade against their own emotions. When someone trades to fill an emotional void, their account is already dead before they click buy. And the cruelest truth of all? The crowd doesn't need to be destroyed. They destroy themselves by chasing their own emotions. Institutions don't need to do much. The market doesn't have to hunt retail. All it takes is for the crowd to keep reacting the way humans always have, with fear, greed, and hope and the result will always be the same. They will remain the eternal liquidity source for the few who understand human psychology better than humans understand themselves. While you're still trying to figure out why the market always seems to move against you the moment you enter a trade, somewhere else, inside the cold steel rooms of major financial institutions, no one's asking that question. They're the ones creating the move. The next layer of the game is far more brutal because it doesn't live inside you anymore. It lives inside giant entities that feed on the flow of money bleeding out from retail traders across the world. Contrary to what most people believe, the market isn't mindless. It's run by institutions with liquidity so massive you can't even begin to imagine it. For them, the market isn't about technical analysis, following trends, or smart trading. For them, the market is a factory that grinds human impatience into profit, and they're the ones flipping the switch. Picture a massive mouth, always open, always hungry, always waiting for new money to swallow. That's the liquidity providers, the market makers, the prop desks. And that mouth never closes, because behind it lies an entire industry built on the panic of traders just like you. On Wall Street, they have a code name for them: stop hunters. It's not a nickname, it's a profession. In sealed rooms without windows, lit only by endless rows of glowing screens, institutional traders watch every cluster of pending orders, every dense pocket of retail stop losses. You think a stop loss protects your account? To them, your stop is free liquidity. They see it. They know where you placed it. They know how many there are. They know exactly how far price has to move to scoop it all up at the cheapest possible cost. You think stop runs are natural? They're not. They're engineered. Those violent spikes that hit your stops, they're not accidents. They're deliberate, calculated down to the pip. When you see a long red candle slicing through your chart, you call it volatility. They call it unlocking trapped liquidity. There's one truth most retail traders never want to hear but always face. The market doesn't move to make you win. It moves to make you react. And when you react, you create liquidity. That liquidity is the food the institutions feed on. You buy into the trend, they need someone to buy high so they can sell. You sell in panic, they need someone to sell low so they can accumulate. You place a stop in a safe zone, they need someone to quit so they can open new price territory. In this game, you're not the opponent, you're the fuel. A trader once asked me, why would big institutions care to hunt my tiny stop? My account's nothing to them. You're right, your account means nothing. But they're not targeting you. They're targeting the crowd that thinks like you. They see your stops, billions of them, stacked together like a wall of liquidity. And when that wall forms, it looks to them like a vault full of gold hanging in midair. A small push, and the wall collapses. Millions of dollars flood into their pockets in seconds. They don't follow you. They follow the flow of fear. You're just one drop in that tide. If you've ever felt the market move too perfectly to be random, you're right. Many breakouts aren't real. Many reversals aren't natural. Many sudden moves aren't signals. They're liquidity events, patterns only those who've been eaten alive enough times can finally recognize. When you see price break above a strong resistance, you cheer. You call it a breakout. To you, it's opportunity. To them, it's bait. They push price just far enough to trigger the FOMO wave. Once the buying frenzy peaks, they dump. A clean reversal, one long red candle, a frozen crowd, and a few institutions smiling in silence. You didn't lose because you picked the wrong direction. You lost because they needed you to win, right before they made you lose. That's how they unlock more liquidity. If you've ever wondered, why does the market always hit my stop before reversing? Imagine them holding a scalpel. Your stop is the purse. They don't need to stab. Just one smooth slice, and the money spills out. The cruel part? After they've taken what they want, the market goes right back to doing what it was going to do anyway, and you sit there staring at the screen, whispering, "Bad luck." No. You were just brushed by the invisible hand of liquidity. In those institutional trading rooms, no one talks about RSI being overbought or oversold. No one cares about retail candle patterns. No one debates which EMA is the strongest. They care about one thing: where's the money building up? Because wherever the money piles up, that's where they strike. It's not analysis. It's not prediction. It's not luck. It's the dark truth of modern finance. Your money doesn't disappear. It gets absorbed by the giant mouths that feed on your liquidity. You think the market turns against you? No. You're simply one of the millions of meals this system was designed to digest. Institutions aren't evil. They're just doing their job. But you're playing a game where you don't write the rules. And when you lose, no one hears you scream. The final answer to where money really goes in the market. The final answer to where money goes in the market is this. It goes into the pockets of traders who can endure the burning pain you're always trying to escape. It flows to those who can sit still, watching price move without feeling the need to jump in just to do something. It belongs to those who can restrain the instinct to act, to those who can stand aside while everyone else rushes in to chase opportunities, to those who treat trading as a real profession, not an adventure, not a gamble, not a lottery ticket. Money goes to those who don't react emotionally, who don't flinch when the candles swing, who don't panic when price moves against them, and who don't get excited over a fake breakout. Most importantly, money always flows from those who act on instinct to those who act on discipline. Instinct craves immediacy. It wants quick wins, fast exits, rapid entries, anything to ease the restlessness. It hates waiting. It hates uncertainty. It hates silence. That's why most traders let instinct drive them. But instinct was built for survival in the wild, not survival in the markets. The market doesn't pay the smartest. It doesn't pay the fastest. It only pays the most consistent. It doesn't pay the aggressive. It pays the composed. It doesn't reward those trying to prove they're right. It rewards those who know when to step back. If you want to stand among the 5% who survive, you have to face the truth most people avoid. The market never changes. Only you must. You can't force the market to obey you, but you can force yourself to become more disciplined, more focused, and calmer. That's the only thing you can truly control. Losing traders love to say the market is against them, but the market doesn't even know you exist. It doesn't know how much you've lost. It doesn't know you're panicking. It doesn't care about your debts, your dreams, or your responsibilities. The market has no heart. It's not your enemy. It's not your friend. It's a neutral battlefield where those with stronger inner control take money from those who don't. You call a pullback betrayal. Others call it the market's breath. You call consolidation torture. Others call it accumulation. You call a stop hunt a trap. They call it part of the game. Winners don't see the market through emotion. They see it as pure flow belonging to no one. And that's exactly why money flows to them. Most traders think they lose because they lack knowledge, but knowledge won't save you once emotion takes over. The losers are the ones who let feelings dictate their actions, because emotion always demands release. It wants to click, it wants to trade, it wants to do something. It fears silence, it fears missing out. It fears being wrong, losing, hurting. Winners are the opposite. They can sit still while the market runs. They can watch opportunities pass without flinching. They can close trades that no longer make sense, even when their ego wants to hold. They can feel discomfort and not react. That's real strength, self-control. Money flows to those who've suffered enough to understand that trading isn't a place to chase positive emotions. Trading is where emotions are tested, worn down, and crushed. Winners are those who've been broken enough times to become numb. They've screamed at their screens. They've thrown their mouse. They've wanted to delete their accounts. They've blamed everything but themselves. And then they woke up. They realized the stronger the emotion, the weaker the discipline. And once discipline breaks, so does the account. Most traders enter trades to prove something, to prove they're smart, skilled, that they caught the bottom or nailed the top. But winners don't need to prove anything. They just execute their plan with cold precision. They don't aim to be right, they aim to survive. They don't aim to be great, they aim to be accurate. They don't aim to win big, they aim to win long. Money never leaves the market, it just changes hands. It flows from the undisciplined to the disciplined, from the impatient to the patient, from those driven by instinct to those guided by plan, from those chasing fast money to those focused on longevity, from those escaping life through trading to those who treat trading as a craft forged through mental sweat. When you can handle pain better, money flows to you. When you can sit still longer, money flows to you. When you can endure boredom, money flows to you. When you stop being triggered by a few candles, money flows to you. When you stop rushing in out of fear of missing out, money flows to you. When you stay calm through chaos, money flows to you. You can read hundreds of books, watch thousands of videos, and listen to dozens of experts. But in the end, you are the one holding the mouse. Only you know that feeling in your hand when price moves against you. Only you hear your heartbeat when your loss hits that panic threshold. Only you know the urge to close too early. Only you know your true limit. Winners are those who no longer let emotion drive every decision. They separate emotion from action. They detach instinct from strategy. They've trained themselves until their reflex is no longer reaction. It's discipline. At some point, after losing enough, you'll realize the truth. Trading isn't a game between you and the market. It's a battle between you and your weaker self. Once you win that fight, the market stops being a threat. When you can control yourself, you don't need to control anything else. The question, where does the money go, has only one answer. Money goes where discipline lives. It goes where silence is respected. It goes where patience breathes. It goes where calm minds endure what others can't. It goes to those who've been hurt enough to understand that the market owes them nothing. And once you truly understand this, you'll stop chasing money. You'll let it find you. Through discipline, through inner stability, through maturity in every decision, through accepting that most of the time you'll do nothing, through realizing that sometimes inaction is the strongest action. When that happens, you'll stop asking, where does the money go? Because you'll know. It's exactly where it belongs, in the hands of those who deserve it. And if you're ready to become one of them, you won't need any more secrets. The market won't change. Only you will. You must become the version of yourself the market can't break. I want you to always stay profitable in this brutal market. Subscribe to Trading Mindset Lab, and let's walk this path together.